We have the Rand trading at 7.30. Of course, beginning of last week, it did weaken above R7.40. There was some risk aversion in the market. Back at 7.40 on Friday as well. And I was reading that importer demand helped push it to those levels.
Yes, importer demand, along with those offshore players that were squaring going into a long weekend in London, caused the Rand to weaken above that 7.40 level over probably the lunchtime period locally. And the markets were looking a little bit uncertain and a little bit uncomfortable with the old risk-off scenario being fully in place at that stage. Subsequent to that, all the markets were waiting for the GDP figures and obviously Mr. Bernanke's speech to follow. Initially, GDP figures, we saw good dollar buying interest, and as the market mulled over, and you alluded to it earlier, was that the revision was worse than expected, and we then saw the market get back into the risk-on scenario and started selling dollars, and we managed to trade below 7.30 before the close of New York on Friday.
Of course, you did mention slightly quiet trade on Friday ahead of that long weekend over in the UK. Today is a holiday in the UK. What's trade looking like at the moment?
Trade both in the currency market and the local exchange market driven on very thin volumes. We are seeing the odd European interest, but so far very, very quiet range-bound markets. Rand traded as low as around 7.2850, and we're currently trading back around 7.30. And it looks like we're very much stuck until we see some sort of direction either from New York or more what I suspect is very quiet markets on the stock exchange and continue through in the currency markets throughout the session today.
Of course, we do have in the US this coming Friday those non-farm payroll numbers, and those are the key numbers that people are looking at. Unemployment is still very high in the United States and doesn't seem to be improving. Do you think that we are going to trade sideways until we see what comes out of those numbers?
I think more than likely we're going to remain in the great 726, 740 range in the Rand, purely on the back of that, as well as we watch the unfolding of the last bit of local data ahead of the MPC next week. And I think that will very much decide the fate of the Rand. So thus far, we're starting to see renewed calls for a 0.5% cut on the back of the data that was released last week locally, and everyone's looking to the MPC and Mrs. Marcus to cut 0.5%. And thus far, until that scenario actually takes place, the market's going to trade sideways and probably a little bit of appetite for South African risk at this stage.
Well, just taking a look at some of that data that we had out last week, we had second quarter growth figures, 3.2%. They were disappointing. But we had particularly benign CPI numbers and PPI numbers also coming in a little bit lower than expected. So going into this week, I think we have the private sector credit extension numbers coming out tomorrow, PMI also on Wednesday. How might they alter the scenario for interest rates?
I must be honest, given the preceding numbers you discussed, I would find it difficult to believe that we're going to see anything that bucks the trend, really, and I can't imagine that we're going to see anything out of the ordinary regarding those numbers. If those numbers hold true to the pattern that's developed, I think we'll see a continued slowing from a money supply perspective, from a growth perspective, and I think that is going to put tremendous pressure on Mrs. Marcus to make the call to cut 0.5% at least. And obviously on the other side of that scenario, we're talking about the civil servant union strikes, and you mentioned that the unions have been asked to go back to the table along with the government ministers to try and resolve the issue. The point being, obviously, eventually that type of inflationary pressure will come to bear. But I think currently in a very, very low growth scenario, I think the pressure is starting to mount on the Reserve Bank governor.
Do you think there's any concern among investors at this stage about the strike activity in South Africa? Are you speaking to clients? Are they asking you what's happening on the streets here?
I'll be dead honest with you, from offshore we're hearing very little, and as the old saying goes, money has no conscience. So for the time being, no one seems to really care how that is going to affect the Rand going forward. But for the time being, I think the situation is so bleak elsewhere, especially in the States, and it just seems that the market is happy to absorb the risk, and they probably believe that we will find some sort of common ground in the very near future regarding that strike.
William, right back at the beginning of the month, we had heavy foreign interest in government debt here in South Africa. Has that continued through to the end of the month?
Well, as you say, initially there was much enthusiasm for debt, local debt, and as the month progressed and the rand started showing signs of cracks and guys were getting out of the risk-on scenario, i.e. last week where we saw the rand weaken to R7.40. We haven't had much follow through in that regard, and we've seen a little bit of selling interest today. We're probably 4 points higher than when we started, and on the back of that, the markets are really driven by very thin volumes again, and the local stock exchange in the region of 1.5% up, but on very, very small volumes. Volumes that we probably would have seen in the first quarter of the morning's trade volumes. They've managed to orchestrate the JSE 1.5% higher than on the day thus far.